Hey traders, David Frost, my strategic forecast. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, November 15, 2023. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? The first thing we need to note is between today and tomorrow is an on-time type of situation. We talked about it last night. We talked about it in the live room today. That doesn't necessarily mean the market has to find a top and turn here. It's that it can and normally will do so. Doesn't have to be a prolonged downturn. However, an interim top could be in the cards. It is options expiration regular way. Weird stuff happens. We've already seen some kind of move this week. The question is, are they going to get up into that downsloping trend line? Where does that come from? Well, you can see it more clearly on the monthly chart. It connects the all-time high, the pivots from the July timeframe of this year, and we're coming up to that trend line once again. That trend line under normal garden variety conditions will be, as they say in the trading parlance, overhead resistance. As a review of what they did do today, what they did do is complete the unfinished business that we talked about last night that I've been harping on in the live room. The unfinished business was officially at 451.19. Where does that come from? It comes from an unfilled gap. Where's the gap? We showed it last night. We'll do it again. The closing price in this candle, 451.19. That is the gap. Here where they attempted to fill the gap and they neglected to do so. The high in this candle, 451.08. That leaves unfinished business. They finished the business. The high in today's session happens to be 451.38. They spiked it. They retreated. And the question is, did they put in a sign and or signal of a trend change within an on-time type of situation? The answer is, it's one of those pseudo types, and we'll count that as part art form, part science. Be on the lookout for some kind of pullback. Don't be surprised if you wake up to a slight gap down tomorrow morning. Remember, they're up a tremendous amount. Any kind of pullback would be classified as normal garden variety. Now, here's what we're looking at for normal garden variety. When you take a look at yesterday's low, the low is right around 436. It's 446.09, getting below that low and staying below that low. Intraday, you're looking at hourly closes below that low, and they could be scaling down if they do that. The point is that it opens the door to all this white space down to the gap. Now, again, that does not mean they have to get to the gap. What that means is the door is open and there are support numbers in between. Inside the number members and certainly live room members will have those numbers on an as needed basis in the morning. The flip side situation is, can they just push up into the end of the week, into the end of options expiration? Can they go achieve that trend line? The answer is sure they can. We don't know they will pull back tomorrow, but we shouldn't be surprised if they do. Pullbacks from an intraday perspective will certainly provide a better trading opportunity than we've seen over the last couple of days within this melt-up situation. Intraday traders need volatility. We need a two-way tape to make the dough. Looking at it objectively, we're the umpire calling balls and strikes. While we do say let's not be surprised to see a pullback, the market is ripe for sure. However, what is the 2-hour chart, for example, telling us? Well, it's telling us they're still on a grind. They're eating time off the clock in the area that they hit today. They did not have what we call a rejection. For example, the unfinished business was at 451.19. While they pulled back from there, and that was around the high of day, first thing this morning, or at least in the first hourly candle, this was not a rejection of sorts. They're still hanging around, building some energy under this level. So that From an intraday perspective, we look at that and we say, well, they're certainly building energy to move higher. However, that's notwithstanding what happens when you wake up tomorrow morning, but that's where they left us at the close today. We take the market at face value. A couple of other particulars about today's tape. It was a narrow ranging day. After yesterday's whopper of a move, that's not out of the ordinary. Narrow ranging day, she needed to take a breath. Who is she? Mrs. Market. Today's volume was certainly lighter than yesterday. Yesterday's volume was better than the average daily volume on the up move. That means there was institutional buying in there. That's a good sign for the bull case. Doesn't necessarily mean the day after you go straight up again, but high volume on a big time up move is good for the bull case unless it's an exhaustion move, which we don't know just yet whether it was or it wasn't. Time will tell. At least in my book, exhaustion would have had heavier volume and you wouldn't have made a new high today. We'll take that at face value as well. What about inside the numbers? We'll read the notes, we'll scroll up, we'll point out a few important things. You can read the rest, pause the video, go back to the chart and double check the work. It's all in here each and every day. Entries, exits, targets, stops, the concept of what's going on in the big picture, drill down to the small picture. This is a tour guide for day traders who wish to trade in the S&P, the SPY, the inverse of the SPY using exchange-traded products, options, futures. It doesn't matter. It's all the same. It's whatever your fancy is. So here we boil it down to above yesterday's close keeps the door open for 450.39. Above that keeps the door open for the unfinished business at 451.19. We already saw that. 451.19, you saw what happened there. They got there. And what traders heard in the live room this morning before they got there is they're going to get there. The path, how they do it, is not necessarily a known, but an unknown. But they were going to do it. They did it. We had some traders that did ride it up there. We had some traders that did short it up there. We have something for everybody each and every day. Pause the video, read the notes, go back to the chart to double check the work. 9:30, right around the opening bell, 451.19 is a target as long as price stays above 449.50. We think better in pictures. Right of the vertical line is today's activity. The arrow is pointing to the price at the trend line of 449.50. They gapped higher opening, came down to 449.50. We'll give it a funny how that works. Went up to where? 451.19. It pays to know your numbers. Wasn't a lot more because of the narrow ranging day. So what I urge you to do is pause the video, read the notes, go back to the chart to double check the work. You'll see the same numbers on the board. You'll see the ones above 451.19. You'll see below 449.50, but we didn't necessarily need them. The market stopped just below 449.19. 449.50 in the afternoon, but the morning, that was the support, and they never got much above 451.19, just by a few pennies to complete the unfinished business. From a stocks on the move perspective, we had a couple on the board this morning, and I'll show you them. We'll scroll down here to see them. We had TJX, we had AAP. TJX did not come close. AAP did. Was one of those heartbreak situations, but we'll look at the chart anyway. There wasn't a whole lot more on the board in the pre-market. It was a quiet opening bell. And by the way, speaking of opening bells, what we've had recently, yesterday, today, what you see in the swing trading system, and this is based on an algorithm that I created over the years, and it's been developed into an automagical alert system. So what happens is, on the market going down, traders started to get alerts for the long trades. When the market bottomed at the end of October and reversed back the other way, the long trades became profitable. They started hitting profit targets, profit target number 1, profit target number 2. We still have some profit target number 2s open. But we had a lot of profits taking, and what happened over the last 2 days? We had a small bucket full of short trades that hit the tape. Stands to reason. The system is working as designed. As it stands right now, 4 short trades are in the money slightly, and 1 is out of the money by less than 0.5%. They're not necessarily going to work out the same day. However, this is how the swing trading business works. I said we were going to look at AAP, and here it is. 52.65 was my number. Unfortunately, low of day was 52.77. But look at this rip-roaring rocket ride back above 60.5, almost to $61 off a would-be entry of 52.65. Now, this is a heartbreaker, but the numbers work. The concept works. Just saying. What's going on over in Camp IWM? What did they do today? They completed their unfinished business. They filled a gap up here that was left open. Also, went right into the convergence or slight convergence of the 200 and the 100 period moving average, and were summarily rejected, putting in the nice tail candle. On time type of situation, my favorite market leading indicator. This is still a bounce in a downtrend. Weekly chart, convergence of the 20 and the 50 period moving average, hit it, rejected. Doesn't mean they can't get above later. First hit, first time, best time, hit it, rejected, still a bounce in a downtrend. What about the folks down at the transportation department? Buttigieg's crew. On time type of situation. Still finished up a Hyundai on the day, up 0.75%. From a weekly chart perspective, if the transports can recapture and close weekly above that 20-week moving average, she'll be above all the moving averages. The trend will be your friend, and it will open the door for another leg higher. Might as well look at the monthly chart. Above all the moving averages, the trend is your friend. Technically speaking, from a monthly perspective, she's tested the 50-month moving average back in here, never touched it again. Back above the 20-month moving average, above all of them, the trend is your friend. The Q people challenging this pivot high over here. The high is 387.98. Today's high, 387.75. Sometimes they come up short. Other times they spike them through. Nevertheless, they're working on this high. That doesn't mean they will or won't get through. What it means is, at face value, they're working on this high. Comfortably above all the moving averages. Technically, absolutely nothing wrong with the Qs from a bullish perspective. Weekly chart, same routine. They're just pounding on this high here. If they can get through, they go to the next area that we cited last night, 391.20 up to 397.85. It's a little bit of a wide zone. It's not meant for an intraday trading type of zone. It's a zone of overhead resistance where they should find, like the term says, resistance. Spike the high, pull it back in the other direction. That could be in the cards. I would jot those numbers down on a sticky note for those Q players out there. About the financials in terms of the XLF, anything wrong here? Absolutely not. They're headed to the next place. Call it $35, give or take. Relative strength today against the SPY. SPY was up 0.2%. XLF a little more than 0.5%. Nothing staggering, yet still relative strength nonetheless. Into the last line of defense from a weekly chart moving average perspective, the 100 period moving average, if she closed the week above or below it, that will be a short-term telling signal. Look what you have here also. You have a low, not that line, but the one that doesn't extend. So you have a low here, then you have a higher low, and then you have a higher low. So what is that? That's bullish. Low, higher low, higher low. That's a bullish signal until the chain is broken. Now they're back above, and this is a weekly chart, so this is slightly longer term. Back above all the moving averages. The trend is your friend for another run higher. Can they actually close the week above all the last remaining moving average in the line of defense, the 100 period weekly chart? We'll see. Smashmouth finished the day flat today. No revelation. Not so much of an on-time situation like the other markets. Slightly different position. However, there's nothing wrong with this market. Look where they are. They're challenging these highs. Whether or not they get rejected is one thing. They are the all-time highs. Rejected doesn't have to mean a collapse. It just means they're not ready to go yet. Maybe they need to eat some time off the clock since they just revisited it. Interestingly enough, I look at the volume over the last 3 weeks on this tremendous move. 1, 2, 3, but the volume is heavy, lighter, lighter as the market's moving up. We had that conversation in the live room today about volume, light volume, heavy volume. Heavy volume on an up day, unless it's exhaustion or an up week for that matter, generally means institutional buying, more to come. Light volume kind of has some pause to the rally. Is it really ready to go much higher yet? Or do they need to eat some time off the clock and build some more energy? It's not a guarantee. It's not set in stone. It's just how I use volume from chart to chart to chart. Volume isn't an end-all be-all. It's one of the tools in the tool belt, one of the arrows in the quiver. Hey, have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, my strategic forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.